Hi, Sam Wilkinson here with Wilkinson Financial, here at our home office in the Woodlands, Texas. Today I wanted to share some ideas with you about retirement planning, and we'll specifically use an example from a retiree from ExxonMobil, since several of our clients have retired recently from ExxonMobil and have had a great experience with us. There's a specific strategy though that you want to consider as you think about the Exxon stock that you actually own within your ExxonMobil retirement plan. So if you have ExxonMobil stock in your retirement plan at ExxonMobil, you have a couple of options of what you can do. Let's assume in this example that you have $500,000 of ExxonMobil growth of those shares. So let's assume you started with $100,000 of cost that you put into that ExxonMobil stock, and now it's grown to a value of $600,000. So the capital gains or the appreciation of those shares was $500,000. So we'll just stick with that example. Let's assume that you want to either move this into your IRA account at retirement or choose another option, which I recommend and should be considered, of moving it into a regular brokerage account where you can take advantage of NUA treatment of those shares. So net unrealized appreciation, which is the value of the growth here, that appreciation of $500,000. Now, if you move that ExxonMobil stock into your IRA account and you put it here, you're gonna pay taxes when you pull that money out. So let's talk about how much you would pay in taxes, assuming you're in a 28% tax bracket. In that situation, you would pay $140,000 in ordinary income taxes. That's actually your tax liability on that $500,000 that you pull out of your IRA when it's time to use it. So at retirement, you put your ExxonMobil stock in the IRA. When you use the money, you pull it out, you're gonna pay $140,000. Now, this is assuming that you spread that growth and that pulling out of the money over the course of several years. In this other option, let's assume that you put all of that Exxon stock and all of that growth ends up in this NUA treatment. In that situation, you're gonna pay, again, assuming a 28% tax bracket, you'll pay 15% long-term capital gains instead of ordinary income tax on the $500,000 when it's time to use that money. In that case, you would pay $75,000 in taxes on those shares of Exxon stock, on that $500,000 of growth. The difference here, as you can see, is a $65,000 tax savings. Now, if you're working with another advisory firm that doesn't manage Exxon stock, they may want you to sell all of your Exxon stock and move it all into one of their managed products, either mutual funds or annuity products, where you lose the advantage of saving $65,000 of taxes. Remember, this is a savings of $65,000. Give us a call at Wilkinson Financial. We'd love to help you out.